Hello everybody, welcome to TraderMerlin Show. We got some used to be regulars joining us here today. I see Shinobi Brian. Good to have you with us, Shinobi. We got Siraj, Lisa, Dana, Kevin as well. You started off right from the top of the show. Usually you, I think you watch the recordings on a regular basis. Good to have you with us. Mario and Les Gold from Cape Canaveral. Don't fall asleep, Shinobi. I know it's late, and it's actually late at night for you over there in the UK. So thanks for joining us. I'm having all kinds of computer problems with regards to TradeStation. So today I was going to do a show for Les talking about my selection process, criteria I look for with regards to generating premium and selling options on a monthly basis. I have accounts where I'm just literally, all I do is sell options. For some reason, my options changed all messed up, so I'm reinstalled the software. It still doesn't work, so I got to get on the phone with tech support over at TradeStation. So I thought, let me go and use Thinkorswim, and all of a sudden my Thinkorswim platform's not working. So I'm not sure exactly if I have a computer issue here, but I won't be able to show you those options things today, Les, until I get this stuff fixed. So hopefully I can get that fixed here soon. So I'll deviate a little bit and go into some questions that came up from yesterday, but hopefully we'll get as much of these questions answered. If you have something you want me to discuss on today's show that's not option chain related, because I can't pull up option chains, let me know and we'll hopefully get it going. 5 in the morning for you. Let's see, 5 in the morning? Is it 8 hours ahead of them? So where are you exactly then, Shinobi? I think, well, the UK should be 8 hours ahead of California. It's 2 p.m., so that'd be 10 p.m. at night. You must be in Southeast Asia. Are you in like Thailand or something like that? Singapore? All right, here's what I'm going to discuss today. And this is something that came up yesterday with Brandon Wendell, and I received 2 questions on this specific topic, and here they are. I'll read them back to back. FX Green sent me a comment underneath the YouTube video, which, of course, I love when you guys send in comments underneath the YouTube video. That helps out. I always try to get to those first. FX Green says, I think Bob Dunn says that he has never in his life seen anybody make money on anything less than a daily chart. Thought that was rather interesting. Okay, and then the second one here is from Lynn. Lynn says, what's your opinion on short-term traders losing money overall? Both of these stemming from yesterday's discussion with Brandon Wendell. So I'm going to take a step back, and I've mentioned this before, that there's all types of traders from all spectrums, from people who are micro trading with bots, right, and algorithms, to long-term investors like Buffett who are going to buy and hold something forever. So it can be done, and there are people who are successful in all of them. So for FX Green, who says, Bob Dunn said he's never seen anybody. Bob Dunn is amazing. I love Bob Dunn. He's a bit of a sensationalist, and he's a bit of an extremist when it comes to his viewpoints and his opinions. So take what he says with a grain of salt. Bob's style, which I like it, is riding momentum breakouts, right? So for him, that's on a daily time frame. That's great. It works for him. I have to call him out a little bit, though, and call bullshit, because on some scenarios, if you look at the people who traded on the floors of the exchanges, I guess Bob would be right, because they weren't using charts. It was using people's opinions. But those people are what? They're day traders predominantly. Most futures traders were very short term. If they weren't out at the end of the day, they might have ridden it a couple of days, maybe a week or so. But for the most part, they were short term traders. So to say you've never seen anybody, as a short term trader make money, that doesn't compute well. Now, to his point, if you're using a daily chart, you're generally going to be a longer term trader based off of that. So I think you have to take what Bob Dunn says with a grain of salt. There is some truth to the matter that long-term charts generally produce some of the bigger, more powerful moves in the marketplace. I mean, that's what we're really all hoping. I was commenting on Walker England's Facebook page, because he had comments saying, what charts are you guys looking at? And I said, I'm looking for the QQQ short today. And he says, oh, are you looking for longer term? I said, no, I'm looking for a day trade short on the QQQs. But if I get a runner and something really starts to move in my favor, then I might let that thing go a little bit longer. It might turn into maybe a couple days, or maybe a week. If it really starts to fall apart, I'm already going to start adding to my short position. And now all of a sudden, what was started as a short-term trade based off of a 5-minute chart, which is what I made my trades off of today, that could turn into something where I'm just moving a monthly stop down if it got to be that big of a runner. So I kind of resent the fact when people say that I've never seen anybody make money on anything less than daily chart. Bullshit. 100%. Sorry for the profanity. Bullshit. I've sat next to hundreds of traders that have lost money trading on 5-minute charts. That said, I've sat next to hundreds of traders who have lost money trading daily charts. It's about risk management, period. Now, I've also sat next to some guys who are unbelievable short-term traders and make phenomenal money. So there's always, the good and bad. I guess when you look back at the statistics, I wish I had the report because I downloaded it and saved it. Bear Stearns did a report years ago which says 93% of traders fail. Okay, I can't make that statement. I don't think I'm part of the 93% that fail. And I don't have the data to go off of that either, right? They were polling their own clients. And my assumption would be that I would agree with that most people who are active traders are probably losing money. And the main reason for that is when you go from a big time frame, let's say that your smallest time frame chart is the daily. When you're looking at the daily, your stop losses are going to be bigger, right? Based off of the supply and demand zones. But you're also going to be trading generally smaller share size. So if we take your share size times your stop losses, you've got a specific amount. Let's say you've got a $1 stop loss and you're trading 100 shares. Okay, I've got a $100 stop loss on that trade. That's looking at long-term charts. But I could go over to somebody like myself who's going to trade, let's say, 1,000 shares. Am I still going to use a dollar stop? No, because my time frames are being shrunk down. I'm no longer using the daily to set my stop because I'm off a 5-minute chart. I might be using something like the 15 or a 5-minute chart for stop losses. So now my stop loss might not be $1, it might be 10 cents. Well, I go 1,000 shares times 10 cents. My maximum risk is $100. So the risk reward is about the same if you look at somebody who's looking at long-term versus the short-term trader. The challenge, and this is why I believe most short-term traders lose money, is the frequency of trades that they are making. Somebody who's trading off a 5-minute chart is probably going to do 20 trades to the one trade that somebody who's looking at the daily time frame. Why? Because they're getting stopped out all the time, right? And I think that there is a benefit to looking at the long-term picture. And I've emphasized this to people early on. As I say, I would encourage people who are starting off to start on let's say your daily time frame and just stay there for a while. Try doing swing trades where you can have a wider stop loss, let those stocks wiggle around a little bit, let them move, and then you can, once you get comfortable, you understand execution, you understand your discipline, risk management, bracket orders, etc., then you can start to whittle it down a little bit. My challenge in the late 90s was when I was teaching this class as well back in 2000 when I was teaching trading. I'd have students come into class and go, wow, Merlin, we love what you do. And I was doing 550 trades a day. They're like, we want to do that. And I'm like, it takes you about 3.5 minutes to tie your shoes. By the time you've tied your shoes, I've already made 17 trades. How quick are you, right? There's a certain, character makeup that you have to be a short-term day trader, somebody who's really active. Now, let's be honest, nobody here should be doing that many trades. It's crazy. Nobody should be doing that many trades. I just got wrapped up in that moment. So I think that we start big, you get comfortable. It's kind of like taking your kid when you teach them how to drive, right? When I learned how to drive, my stepdad took me to a college parking lot. I went to Sonoma State University, and he took me to this massive parking lot with no road dragons, no little dividers, nothing. It was just a gigantic open thing, and I was driving a 4x4 Toyota pickup truck with no power steering. That's what I learned to drive, and I was, by the way, it was a manual, not automatic. That's how I learned to drive, right? So you put them in a challenging spot. You put me in a spot where I'm not going to get hurt either way, and I give time. If I do make a mistake, I speed up too fast or I stall it or something, there's nothing around me that's really going to hurt me. That, to me, is looking at the weeklies or the dailies. After you get comfortable there, what did my stepdad do? He said, all right, we're going to actually get on the road with other cars. All right, maybe that's going to the 4-hour, the hourly. Then he's like, okay, now we're really going to push it. Let's get on the 101 freeway during rush hour traffic, bumper to bumper stuff. Well, maybe not bumper to bumper, that's just boring. But getting me in a much more active environment. And to me, that's where you start to go down to the lower time frames, the 5s, the 15s. Where are you more likely to get into an accident? In the parking lot when there's nothing around you, or on the freeway where there's cars all over the place? To me, that's how the analogy I like to look at when I talk about trading short-term time frames. But to say that nobody has ever made money on looking at something less than a daily chart is asinine, and I apologize, Bob. That's just downright stupid. Now, when I was starting out at this, the industry said that you should not be a day trader. Do not be a day trader. Don't use the tools. Don't use technology. It's bad. You should be an investor. That's media propaganda for the institutions because they want you to use their services. They want you to use a broker, want you to go through your Schwabs and all these full-service brokerage firms. In reality, the people who are really making money were going what? Short-term. They're out by the end of the day. Futures traders, as I mentioned, out by the end of the day generally. Now, some did carry big positions, but again, only when it was working in their favor. So, I have no problem with anybody looking at any specific time frame. If you like to look at short term, great. Just know your odds are probably lower of long-term success simply because you are constantly generating commissions if you are in a fee-based account. You're also being stopped out a lot, which from my psychological experience, that does major damage to your psyche and makes you feel like a failure if you're always getting stopped out. You won't get stopped out as much when you're trading off a daily chart because your stop losses are much, much wider. Let's see. I'm gonna go back up here because I kind of went on a little bit of a rant. I know, Scott, and he's a swing trader, right? He's looking for short-term swings up or down, a pivot trader, if you will. But to hear him constantly badmouth anybody who doesn't do what he does, I think is a bit disturbing. Again, I've mentioned on this program, I don't care what you guys are using. If your account is going up in any trajectory above zero, then you're doing something right and you have something that you can build off of. To say that everybody loses money is total crap. It's not true. Again, going back to Bear Stearns things, I would love to have seen the details, but they wouldn't release the depth of detail on their accounts of what people were doing. So all I can do is go off of my own personal trading experience, right? The one thing I can tell you is this. Markets are built to go up. I've mentioned this many times. They are architecturally designed to go up over time. So just saying that, your probability of making money is greater if you just buy something and hold it. I know it sounds stupid, but that's just the sheer mechanics of the market. And I've mentioned this before. If anybody doesn't understand why markets are built to go up, just type in the chat and I'll explain it. But that's how they're architecturally built. That said, market timing, I think, plays a huge factor in this. I've had friends just in the last week say, what should I be buying right now? And I'm like, oh, I don't like to recommend anything anyway because I'll do it with my money, not yours. So you look at something where our markets are right now, which is a very elevated price point. We still have some great economic data coming out. And God, you saw the pending home sales, existing home sales numbers. All this stuff looks pretty damn good, especially the Case-Shiller Composite 20 Home Price Index, which is up over 14% year over year. These data points all point to a higher market. But when I look at some charts, because you guys are probably tired of looking at my ugly mug, here is the S&P 500. Let's go to a monthly here. I think it's safe to say that this is in an overbought period. And I don't know when it's going to stop or when it's going to correct. All I can say is I'm probably not going to be as enthusiastic about building a long position right now, just because of this move that's happened since the COVID pandemic started. Really just blows my mind how much we've moved up. And if you look at the previous bull market rally, which is one of the biggest ever, right? Go to 2009. I mean, that thing, you could argue it's still intact. Mind you, the little dip we've had here from COVID, but it's actually accelerating now. So, to say buy right now as a long-term investor, I would say probably not. Let's wait for better opportunities to buy on some pullbacks here if this market ever does pull back. Let's see. Lee says, I've heard Bob say that on lower time frames can work. He recently heard him say if you miss a trade, he does find a way to get in. Yeah, I don't know. He's just always been one that just says if you use anything less than a daily, then you're wrong. And I think we would all agree. You're not wrong. You just have to understand there's a specific set of risks that are inherent to short-term trading, as well as a specific set of risks and rewards, by the way, to each of the short-term or long-term trading. So it's just one that was interesting. I got multiple questions on it, and I thought it was rather frustrating. Now, to Lynn's question, which is slightly different, it doesn't specifically say anything about lower time frames. It just says short-term traders losing money overall. I think that is probably true, and here's why. I think from the investment perspective, which we already discussed, you can hold something for a long period of time, and that will right a lot of wrongs. So if you bought right now the S&P at 430, and all of a sudden it drops down to 200, a normal investor is just going to hold on to that because they just don't know any better. Over time, it'll probably be back up above 430 at some point. Just don't know when. A trader might churn their account too much, and a short-term trader will generally do that. For me personally, I've told you guys about my 10 laws. There's three of them all revolve around one basic problem that I feel most traders make, and that is an unwilling desire to lose. As a short-term trader, you have to embrace losing. It's going to happen a lot, and it's going to happen frequently. So the quantity of losses is going to be high, and how often they happen is going to be high if you're a short-term trader. That's something you have to embrace. So for those that have that mindset of, I don't like to lose or I can't lose, what ends up happening is you'll end up having monstrous losses. You'll hold something way past the point that you should, and next thing you know, your account is gone, and then you end up being a statistic out there and your account is done. I have seen this happen so many times in my trading career. And like I said, fortunately for me, I was on a retail trading floor, where I got to see firsthand not just people lose every single penny they have and then some, but I also got to see the reactions or how people dealt with losses. So, to me, that is probably the main reason why most traders, active traders, end up losing money. It's not that they're making bad analysis. It's not they're using the wrong or right strategy. It's simply they just hold on to something way past their stop loss and ultimately ride it down into zero or get margin called out. AVP says, when is this thing going to drop? Heck if I know, my friend. It's funny, today I actually had a short on the NQ. Right as it broke the lows of yesterday, I was short that one. Got in there, it had a nice little winner going, and I went to take a call. By the time I came back from the call, it already jumped back up. I ended up dumping out of that one for a small loss. But it's one of those things that I'm waiting for it. I'm hoping that when this market does really roll over and we get more downside move, that I'll be scaling into a big options position again. That's 93% of people with no legit trading lose money. Yeah, I think it's just Big Ab. I think it's just anybody who gets involved with financial markets. I think that overall the retail person loses, and we could make the argument or go back to the old belief system that institutions will always win. You know why institutions win? It's really simple. Institutions win because they have a plan. An institution gets out of a position. Generally, they will lose to a point and say, I'm out. I told you guys some of my biggest losses have been refusing to accept that I was wrong. Nowadays, I don't have any problem admitting that I'm wrong. It'll happen often. It's going to happen frequently. I just can't be really, really wrong. As FX Green says, stop outs are a necessary evil. I agree. And I don't even think that they're an evil, right? They're almost like they're just necessary. They're necessary to keep you in check, because if you win on every trade, all of a sudden you start getting really cocky. You start to expose yourself too much. So I'll give you a scenario. This happened to me. There was a period where, I don't remember the exact numbers, but I'll get them close. This was back in the late 90s where I was doing pretty well. I finally got past my major losing point. I was doing rather well. And there's a period where, like on a Monday, you make $2,000. I'm loving it. Yeah, $2,000. And for that week, it was like I could not lose a trade. So, $2,000 on Monday, $2,000 on Tuesday, $4,000 on Wednesday, $5,000 on Thursday. At this point, I'm up over $10,000. I'm loving it. I'm like $12,000, $13,000. And you're like, yeah. And I kind of kept building my share size. And my normal share size was 1,000 shares. So Friday comes along and I'm like, man, I am on freaking fire this week. Boom, you go in and I'm trading 5,000 shares. So I went from my 1,000 on Monday, till maybe Thursday I was up to like 1,500 or 2,000 shares. I just loaded it all up. And by the end of the day on Friday, I had lost $500 overall, including all the gains for the week. So for the week, I was negative 500, and I was up over $12,000, $13,000. That's because of not having a plan in place and getting overly cocky and false confidence, meaning that market was just handing out money to me. But what it was baiting me. It was luring me in. And then all of a sudden it sucked me in and just said, oh, he's in there. Bam, and just took me out. If something's working, stick with it and gradually increase. But I got overly aggressive and jumped in with a ton, almost 5 times my normal share size, and got slaughtered. These are learning lessons that hopefully you never make again. But again, the market will lure you in any way that it can. And for me, you see this happen to people on a regular basis, and you finally go, okay, there's a pattern here. It's not just me who's doing this. It's 100 plus people on the trading floor a lot of them are making those same mistakes. Let's eliminate that from our trading record overall. Let's see. What else do I got here? Nobody learns to fly starting out in 747s. Yeah. Or reading a book. There's a lot of false prophets out there. One in particular, let's not even go there. I was just about to go down that road, but we won't go there. We'll take the higher road. I just wish that this specific individual would be famous for who he really is, and his business would be shut down, and he would be completely blacklisted from the industry. That would be my overall goal. Hope it happens someday. Let's see. If you see random text coming through in the chat, it means, okay, no worries, Shinobi, got it. So just to be clear about using TradeStation when setting curves on the higher time frame. Yes. Yeah, and again, this is a question I got from another viewer as well, talking about why do I use specific ones. I like the 103XN because it gives me what the actual levels were in the past. Whereas if you're using the standard, the HCL, a continuous contract, it's not going to give you those exact levels. The numbers change because as futures contracts roll over, there's adjustments being made. And in the 103XN, it takes those adjustments out and says, this is what the actual price was. So yes, if you're doing the high time frame stuff, I like to go off of the 103XN or whatever that adjusted piece is. If I am short-term trading, I don't really care. I'll just use the current contract. Right? Give me the old SPU 21. Great, I'm in it. Let's go. That's how I would do it. That's just my personal take. One who shall not be named. That's right. Yes. I mean, it's funny when you read through specific lawsuits, it specifically says in there, this individual over well, I forgot exactly the time frame, but over a period of a couple years, traded very little and lost money, yet touts himself as being a great trader. It's wonderful. And of course, that's coming from subpoenaed records from trading accounts, which is great. Love that. Yeah, me too, Chuck. I never would have thought how fortunate I was to have that experience to be on a retail trading floor. It really was one of those things where my professors at university, when I told them I was taking a day trading class in 1998, they were like, oh my gosh, this is a scam. Don't do it. Don't do it. It's a total scam. And even one of the professors I looked up to the most was like, you're basically throwing your money away. At the time, I think it was a $5,000 class. And I came down and I ended up taking this class, and it wasn't a scam. It was just a brand new technology that nobody really understood or knew, direct access trading. And I think that if you look at what's going on now with digital assets, the decentralized marketplaces, the exchanges, lending protocols, all of a sudden I'm looking at that where a lot of people call them frauds and scams. Yeah, there's a ton of them in there that are garbage, but there's also a lot of really great potential, which is why I'm so excited about digital assets and markets like that. No comment, Shinobi. No comment. We'll just leave that out there. Let's see. Merlin, you said you have an account where you sell options. What % do you close a trade when profitable? So, great question, Lori. And I wanted to build this special show for less, and I'll probably do it at some point as soon as I can get this fixed. I might have to actually upgrade my TradeStation to 10.0, which is going to suck because I like 9.5. It's where I do all my good work. It's not that I'm looking for a specific % rate of return on a trade. I'm looking. Well, let me rephrase that. When I'm selling options in this specific account, so there's an account where my goal is to make 1% a month, and I'm doing it as low risk as possible. And I know some of you are going, well, 1% a month isn't that big of a deal. It's kind of a large account, so it does make a difference, especially when that starts to compound and compound. So I will probably do a special show once I get this option thing running back up. But to answer your question, Lori, what I'm doing is technically I'm looking at a very liquid ETF, one that I like to set up, maybe one that's had a nice spike down. And I'm looking at the option chain going, okay, how much further down would I feel comfortable buying this specific security? SPI, SPX, something like that. It doesn't matter. Gold, silver, real estate. Just give me a very liquid ETF. And then I'll go down and I'll look at the option chain and say, where is 1% on that for the month? And that's usually how I'm making my decision on that. And of course, it's based off supply and demands on the chart, but that's how I do it. So I'm not saying I want to make 50 or 60 or 80% on when I'm selling options. When I'm selling, I'm going for defined premium, and that's the goal of it. Let's see. Let's go. Is the later London Open Globex more important for zoning? Not really, Scott. I look at the zoning or Globex as pretty much the same. And for me, if you're looking at the Globex sessions for whatever market it is, right, whatever futures product you're looking at, generally I'm looking for volume spikes in Globex. So if you look at the charts here, let's go to pick anything. This is not the futures page. I'm going to my futures. So let's say we just go to the S&P, right? And I'll go, let's say, to a 5-minute. And again, if you guys have questions, feel free to type them in. I just want to do to go a little bit into the topic du jour, which was that all short-term traders lose money. Absolutely not. That's not true, but I think a majority of traders do lose money predominantly because of risk management. And I can go into that any more depth that you guys like. Just let me know. So here is your S&P for the S&P futures, right? And you can see there really was nothing happening here. You got not a lot, and all of a sudden we get into midnight, boom, volume kicks off. So there are times when specific exchanges open up and we get a little bit more volume kicking in. But most of the action is going to be happening here during regular U.S. market hours. Now, for me, if I see big spikes in the pre-market, like, let's zoom out a little bit. I'm going to try to get just the current market. So here is the opening of the U.S. market, right? This is where I'm looking for surges, spikes up or spikes down to help me identify maybe climactic volume or pivotal turning points based off of volume. When you look at the session before this right here is now the normal. And you guys noticed before it was very low compared to the opening when the U.S. equity markets were open. This is all from midnight to 6:30 in the morning. There's not a lot here. But if I find a supply zone or a demand zone that's like really critical, let's say for this one up here that we saw on the S&P right about 1:15 this morning, you see it had a pretty aggressive candle down. I would love it and feel more confident that this would be a strong supply zone if I had high volume over here, but I don't. Right? It's just normal. So I'm not putting a lot of weight on it. And then when we go into regular market hours, you can see all of a sudden that volume changed compared to normal. So I don't generally put a lot of emphasis on the Globex or after hours session, but I can assure you that if the S&P started to rally up towards that 4304, that I'd be potentially interested in going short on that one. You can see today I actually broke right through it without even stopping, but these are just numbers I'm looking at for my trades. Now today, we didn't mention the NQ. I had one short this morning. I think I talked about it yesterday. I had a low point put in here and actually alert on my system that once we got below this 14,498, I went to the Qs and shorted the Qs. And you can see 15 minutes later, it just ripped up and stopped me out. So I took a small little loss there. But I was really waiting for that move to break down as a short-term trade because of just really what we saw here. It's nothing that was saying, hey, this market has to come down or really rip down. But it was basically looking at that low right there and saying yesterday was a pretty condensed, narrow little range after two big bullish days. Not a lot of decision, no real range. If we break the lows, I was looking to go short. If we broke the highs, I was going to look to go long. And the short happened before, so I ended up getting short on this one and stopped me out. But that was it. Okay, gosh, you guys have got all kinds of good stuff coming through here. Is a later London opening global? Nope, no. I don't really have an opinion on that one, Shinobi. I don't really have an opinion on MT4. I'm using Owanda. I used it in the past, but it's just my spot forex isn't what it used to be. I mean, I don't really trade too much spot forex anymore. And for futures, I'm predominantly using TradeStation, and I've got a couple other ones, but not using it. I'm not using MetaTrader 4, but I have nothing bad about them. Yeah, Owanda is who I got. And they're okay, but I really haven't been doing much spot forex anymore. If I do forex, it's generally me on futures. All right, what else do I got here? Question-wise. Let's go to Lori again. But do you keep the short open to expiration? Yes. Yes, generally. I would say 99% of the time, under rare circumstances, will I get out of that thing. If for some reason I feel like we're going to crater and I could be threatened to end up holding that thing that I really didn't want, then I'll dump it. But for the most part, I'm picking a level where I'm happy to own it, right? And let's say, I don't know, let's say XLE. Right now I sold some puts on XLE, I sold some puts on silver, and I sold some puts on IWM. Let's look at silver. All right, so here's your silver chart. And let me bring it up for you so you guys can see it. This was going back, I think this is, I actually waited late till it sold off, so it was someplace in here. I don't remember the exact date when I sold those puts, but there's two lines I'm going to draw on your screen here. That's the 24, right around 24, which is what I think it was trading at. And then I'll put in my strike price, which is 22.50. Okay, so see this line down here, the bottom line? All I basically said is within the next couple of weeks, right? Because when I sold these options, it was already the 18th of June. So that's actually expiration. I'm sorry. So it was on this last bounce up here. So it was had to be after the 18th, which is probably the 20th, 23rd, 24th, 25th, somewhere in there. Sold these put options. And the reason for that was I'm happy owning this at 22.50. I think silver's got potential long term. So you look at the range here for the past few months. Basically, the amount of money I collected for selling those options at this demand zone here was just over 1%. So even if it starts to sell off here and get down to 22.50, I'm okay with that because I'm going to collect my 1% premium. And then if I own it at 22.50, I'll be a holder and I'll sell calls against that position. And Tom was right. Tom corrected me the other day because there was a gentleman who was asking about, he's got some big winning trades on Boeing. I think the other one, it was Boeing, Facebook, and there was a third company in there that he had long. I can't remember off the top of my head what it was. And I said, the best thing that I would be doing a trailing stop and selling covered calls. And Tom's right. You can't set a stop loss if you have a covered call. You'd have to get rid of one of them first. You have to get rid of the call and then set your trailing stop. So to me, it's almost academic. If you're selling a covered call, so let's say you had Facebook in this case. Ooh, nice move up on Facebook today. So here's Facebook, and let's say you sold a covered call at 360, right? So your covered call is up here. You're long the stock right now, and you say, okay, it gets 360, I'm okay to sell it. Well, you should have a stop loss as well, and let's say the stop loss is, I don't know, call it 335 just for fun. So if it goes down, oh, thank you, Mario. It was Disney. There you go. So you got a better brand than I do, Mario. So if it goes to 335, you could buy back the call that you sold and then get out. You would take a little bit of a loss, but it shouldn't be too bad monetarily, but I would be more concerned with getting out of the underlier than the option if I sold the call, if it starts falling against me. So if Facebook starts selling off and you had a covered call and it starts selling off, I would buy back the covered call and then use my stop loss and just be out of it. But the stop loss to me is the most important piece because your real money should be coming from the underlier, right? Obviously, the selling the calls is just going to generate you a little bit of bonus income on that one and hopefully lower your cost basis on it. But what you can't have happen is all of a sudden something rips against you so much and, then you're in real big trouble. Is CL consolidating? Well, we've got OPEC going on. I actually was kind of anticipating this pulling back a little bit because we talked about this on Monday Morning Must Knows, which was, look, OPEC is probably going to start getting some pressure from the United States politically. And the higher that oil prices go, the more that it actually opens up more the U.S. fracking again, and more pumps and wells will be coming online, that are, let's say the cost of oil for some of these fracking companies is, $60-70 a barrel. Well, it really didn't make much sense a couple months ago. Now all of a sudden they can get back online and start making some money. 2% jump today. I don't know if I would call oil consolidating right now, Scott. If you look at that CL chart, to me it looks like it just broke out. We've got this outline here that we had a ascending triangle. We saw the breakout of that one. So I will draw a yellow box around what I think just happened, the breakout, which is right in here. We really had about a week where it just sat sideways. Today's move, to me, is pretty bullish. You had it on much higher than normal volume with regards to the futures contracts. And I don't know, it feels to me like this is going to be trucking up to the next level, which we take a peek back to the weekly. You notice that once we got above that line, we're pretty much clear skies right now. 81.25 is the level I have mapped out next, followed by 84, call it 75. It could very easily get to those numbers. It just seems to me like there would be a problem with these prices continuing to rally during the summer. I mean, all of a sudden everyone's really like, hey, I'm going travel, I'm driving, I'm flying. Man, it might put a damper on some people's travel plans, but hey, we've all saved so much money. Who cares about paying a little bit higher price than gas? Oh, on the 1 hour. All right, so let me go back to that one. So go to the CL on the 60-minute. I mean, if you're looking over the last 5 hours, sure. But, I wouldn't put too much effort. I really want to see how this pans out over the next few hours. Certainly it's consolidating over the last few hours, but I don't put a lot of emphasis on that one. That's not a real big factor for me. Maybe just open the Keystone Pipeline. Let's flood oil into many other parts of America. Yeah, I don't know. Maybe fire them back up. I'm interested in options, but not sure which platform to use. If you're looking at options, I'm not sponsored by anybody, so nothing actually. I have no sponsors whatsoever for this show, so anything is just my own opinions. But I use TradeStation for options simply because I've got a bunch of different accounts there and it's just easy. The options chain stuff on Thinkorswim is much better. TradeStation, Thinkorswim was built around options. That's what it was. It was an options platform first, and then they built out these other asset classes. So for options, Thinkorswim is probably the best platform to go out there. For now, what we've done actually inside of CliK, which is pretty exciting, we've basically gone through Thinkorswim and said, what are the parts that make this the best options platform right now? We've taken those pieces and they're building out CliK to be even better, much better than what you would get with Thinkorswim. So hopefully they don't see our features before we get them to market, because some of them are never been done before. Pretty awesome stuff. All right, what else do I got here? Let's see. Any other questions? Not exactly sure. I don't use that terminology, Scott. I know that certain people do use a Globex trap. My assumption would be it's basically using those levels, putting too much emphasis on levels that happen in the Globex, which is we've established that, like, why you wouldn't use those levels, because they usually have lower volume and they're not going to be as impactful. The Globex trap might be treating those levels as the same, but I'm not sure. I don't use the term Globex trap. Boy, that's a great question, Mario. When is it going to go live? It was just going live before all the FTC stuff. So unfortunately, everything got shut down, and rightfully so. Any firm that was doing business with OTA was kind of like, oh, hold up a second, until kind of figured out what was really going on and settlement happened. And it's unfortunate. I mean, if you guys might have heard, the Supreme Court just ruled that the FTC, they ruled unanimously. I think all 9 judges said basically the FTC had been overstepping their boundaries on a lot of these lawsuits of companies they're going after. And unfortunately, there's no recourse for OTA to go back to the FTC, at least in my opinion, I don't think there is, and sue them for, almost creating this story up. So unfortunately, we had some setbacks there with development. I know that they're pushing for that as soon as possible. Once we get some of these contracts set up, that will be going live, and most likely be back with TastyWorks again, or Tasty Trade. And hopefully we'll go from there. I'd like to see it at the point where once we have CliK done, and it'll probably never be fully done, meaning there's always going to be new improvements and developments, but once the big pieces are done, we have equities, futures, Forex, and I'm pushing to get cryptocurrencies in. They're actually options first, and then cryptocurrencies. Once that's all done, then we can start adding on to some of the really unique features. There's some stuff in there that nobody's doing, and I almost don't want to talk about it because I don't want them to hear about it, because they'll try to rush to build these products, because it's pretty amazing what they've done in the development team. Eyal Marmarelli and his team, and Mark Greco, who works on the platform for OTA, just done a marvelous job, and I'm excited about it. It's just unfortunate it's taken such a long time to get there. It's funny, I remember at the beginning they were saying, oh, we're going to have this done in 2 years, and I was like, actually, he said less than a year, and I'm like, dude, this isn't like you're building an app for a phone, right? There's some serious big pieces in the back end on CliK that have to be built out. So it's all started from scratch. Hopefully it'll be done soon. The big question is, what trading platform is CliK going to be compatible through? Well, and Lisa, this is the thing. It's built to be basically an interface. So if your brokerage firm has an API, like Charles Schwab has an API, Ameritrade has an API, E-Trade has an API, Thinkorswim has an API, can we plug into it? That's the question. So going to actually believe we'll say the same thing. What brokers will work with CliK? Right now, it'll probably just be Tasty Trade. But the goal is to get more on there. Because I think what happens is, let's say, for example, you're an E-Trade customer, and they've got their platforms, and you show them this platform, say, hey, this does so many things, I'd like to use this. If they open up the API, let us just plug in, all the back-end administrative, accounting, commissions, all that stuff is still E-Trade. All you're using is an interface to connect to the market and use data in slightly different ways. It has nothing to do with any of the back-end things. So you're not really doing anything on E-Trade's end. They're just saying, okay, we will connect our financial data pipeline to the front end of this platform, and then you can do whatever you want there. E-Trade would still control everything on the back end. So it's not like y'all would be getting commissions off this or fees for you making trades. It's just maybe a software platform fee. Yep, I agree with you, Lisa. And I think I said that to him. I said triple the expect. I mean, but if you know Eyal Shahar, he's definitely like, he always likes to run full speed ahead. So for him, it's like unacceptable to do triple. I'll do it for half the time. I want it faster, which is good. I love it, because working for him, you're always pushed to the max to get things done, and projects are always fun to work on. So, okay, let's see. What else do I got? Core question. Yeah, I'm not going to go into core, Scott, just because that's OTA stuff. This show is not OTA, so I don't want to get into little nuances that should be asked in your XLTs or to your instructors in the classrooms or in the sessions. And kind of have to walk that fine line with this show, if you know what I mean. I don't want to be giving away OTA's content, because they may look down upon me for that. So I can't answer that one for you. But if you got XLT, that's an XLT instructor question right there. They'll give you the exact answer of when those candles is, what wick is, etc. I still do sometimes, but not all the time. I try to keep things PC. I don't want them to get in trouble, or I don't want to be getting in trouble by giving away proprietary information, we shall say. All right, let's see. Tomorrow is Whiskey Day. Yes, can't wait. Been a fun week, actually. Not the greatest trades. Last week was a much better trading week. This one got a couple little chops out of it, but expect these markets to start to slow down tomorrow. And then you obviously got Monday off, and then potentially Tuesday being a light day as well, as some people like to take these really long weekends. That said, data-wise, what do we have cooking for mañana? Well, the economic data stuff is the important part. Actually, it's tomorrow is your OPEC. I for some reason I said today because I jumped the gun. OPEC is tomorrow. That's going to be an all-day meeting, and I think keep an eye on crude oil. I will probably not be touching it because the volatility that could spike up tomorrow. Again, you saw a little bit of breakout today on decent volume. If the meeting is all day tomorrow, anything can happen. And again, I personally believe that you're going to get a lot more pressure on them to raise production, which should drop these prices going into summer just to appease America. Who knows how it's going to go, but that's going to be all day. You also have manufacturing numbers coming out. That's going to be into the market open. So as the market's open, you'll be getting manufacturing data numbers coming out. That's at 7 a.m. Pacific time, so 30 minutes into the market. Other than that, pretty much it for the big announcements on the economic front for tomorrow. Really today, you didn't have anything that I thought was over the top, other than the pending home sales numbers, which was better than expected. Yeah, all right, here we go. I'm all confused on my days here. Yeah, right. So OPEC is today and tomorrow. Just want to make sure I got my dates right. Let's see. Manufacturing came out today, so I am off. And that was better than expected. All right. Let's see. Earnings. Do I have anything for earnings? I haven't looked at my calendar because I've been just too damn busy. The challenging part for me, guys, is I'm doing more and more work, actually like job work. So it's taking its toll on my preparedness for the show. I apologize. Hopefully you guys aren't suffering too bad. Today, you had Walgreens, Boots Alliance, you had McCormick and Acuity. Nothing was really big there. And then tomorrow, you have nothing really important on that earnings front announcement for tomorrow. Did they increase? I haven't paid attention. I knew that they were meeting today, and I thought you saw the spike up because of it, but I didn't follow it. Didn't check it out. I'd be curious to see what happens today. At least like Whiskey Day today? No. Does anyone have the room in the room have a phone number, way to contact a person in Irvine Center of OTA? I believe that the main directory number is 888-841-8418. That's like one of the only phone numbers I memorized many moons ago. I believe that will take you to like a central line. It's 888-841-8418. That's the number off the top of my head. But if you have a specific one, a specific person that you want to talk to, Lori, let me know and I might be able to get you a direct line. All right. I like it, John. Being in a place like I like it because what's gone on with crypto. All of a sudden, they're really wanting me to build out a bunch of crypto stuff. So, I used to have a lot more time to research topics for the show, go to listener questions. Today it was like basically got home and I was like, oh man, what are we gonna talk about? I want to do this options thing for less, and I went on my platform. My options chain is still a mess. Installed some stuff, still not working. So I'll have to do some tests tonight. Hopefully we can get it up and running by tomorrow. All right. Again, no earnings for tomorrow. We got pretty much a quiet day economic announcement wise. So I guess that will do it for today's show. Hopefully you guys aren't too scared and think that all short-term traders lose money, because they do not. If you want to be one of the ones that loses money, that's pretty simple. Then just not have a plan, don't use stop losses, and let your losses run against you as much as possible. That's your recipe to blowing your account, being a statistic. If you are nervous or feeling manipulated by some people saying that, hey, you've got to use only long-term time frames, again, it's all about you and what fits your style the best. Right? Again, to summarize, I think long-term traders, they'll do better long-term over time because markets are built to go up and they're not going to get jigged out as much. Short-term traders, like there are hundreds that watch this show on a daily basis. I've worked with hundreds of them as well. Short-term traders, they're going to do a lot more trades. Therefore, you can add on to commissions. You're also going to get stopped out more because the frequency of trades that you're making and your stop losses are generally tighter. If you have good psychological skill or strength, then that's no big deal. If you're a person that can't lose or can't handle losing, it could start to add up real quick, especially when you go on a losing streak where you lose 5, 6, 10, 15 trades in a row. you feel like you're a loser, and your brain says you're a loser because you're losing money. That's not true. Something was just off with your timing. Something's off with your stop losses. Generally, what I see happen with those short-term people that get stopped out all the time, their ATR or stop loss based off ATR is way off, right? Somebody may have an ATR of 50 cents, and they're going, I'm using a 7-cent stop. It's moving this much, and your stop loss is this much. You're going to get taken out right away. It's just bound to happen. So simple things we can do to correct that, but just don't let anybody scare you into thinking that, oh, everybody that does this is a loser. Not true. There's a lot of great successful short-term traders out there that are looking at 5-minute, 15-minute, hourly time frames. They're just the shorter time frame you go, the more risky those specific trades can be to you in the long term because of volatility and noise that happens in there. Daily charts, you smooth out a lot of that noise. You can put your hands back, sit on the hammock, and grab yourself a cocktail. You're on a 5-minute chart, you're like this in front of your screen with your fingers on your keyboard, stressing out, biting your fingernails, sweating a little bit different mindset there. Take your pick. All right, guys, that's going to do it for me. Tomorrow, I will not have a guest. I'm going to do whiskey. I'll be doing some drinking. If you guys have a specific question, as we had today, and again, thanks FX Green. I know I saw you in here earlier today. Anna Lynn, thank you for your 2 questions. Do me a favor, help steer tomorrow's show. Otherwise, I have to make stuff up, which I really find as well. But if you want something covered tomorrow, email's on the screen, TraderMerlin@gmail.com, or you can put it down below the YouTube video. Just type in your comments, questions. I'm always looking at those first. Those get priority for being answered. That said, hope you guys have a fantastic day out there tomorrow. It is Friday. For some reason, I clicked back to Wednesday. No, today's Thursday. Tomorrow's Friday. Last day of the week. Be careful. Expect lighter volume. Friday before our holiday weekend. Generally really light volume, but we'll see how it goes. I'll talk to you guys tomorrow. Take care.